Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Hello, this is Kevin Prins. Welcome back to the Market Insights. I'm going to be sitting today for your normal host, Aaron Allen. And what we're going to do is bring to you is an update to the future of digital investing. We have done this session once in the past, or twice in the past actually. In those sessions, we gave everybody some key insights, what's going on in the direct channels, and we want to do that again to bring you up to speed on what's happened in the last year. Before I go into the actual content, a couple of things. Number one, if you've been in these sessions before, you will know that we are not here to provide specific advice nor specific recommendations. What we do want to provide you is insights to the overall industry, and specifically insights with a tilt towards exchange-traded funds. And with that, I also want to bring in our guest, and of course, David's been patiently there with me. Dave McGann is joining us. He is the Director of Product Strategy from BMO InvestorLine. And Dave was with us last year too. So Dave, thanks for coming back, and thanks for joining us and sharing the insights that you're seeing firsthand from BMO InvestorLine.
Thank you, Kevin. Pleasure to be back with you and with the audience as well.
Oh, perfect. Hey, Dave, before we get into the core content, one key thing we always tend to do is, we remind people that if this is your first time to these sessions, consider subscribing to this through YouTube. And then second of all, we always like to kick off with a little 1-minute update, what's going on in the market. And as we kick off the new year, I like to start off with a little piece of good news. And the good news is effectively coming from how the CPI is trending right now and actually directionally moving down. And that, of course, is a key metric towards inflation. And what's that really sending to us as investors? Well, it's probably potentially some opportunities going forward in that interest rates may not need to keep going up at the pace in which they have been in the past. And maybe in the future, they can start coming back down. Now, I think we're a little bit way off from that, but I take a look at this as kind of a glass half full, glass half empty. I look at this as a glass half full, as, you know what? Maybe we are seeing the slowness, and the slowness in the CPI increase is a direction that allows us to consider where to invest going forward. And I look at that as an opportunity set. Certainly seen as a good trend in the marketplace too, that if this trend continues, it should be beneficial towards markets. But again, we don't know right now at this time. Let's go from here and let's shift gears into the actual core presentation, the growth of online investing. Now, Dave, I want to turn to you first and foremost, and I want to talk about some key metrics, specifically around number of accounts, because that's one of the key things you're looking at when you're coming through online investing and your metrics you're looking at. Talk to us about that. What's that mean of, your accounts, but also has been through the pandemic too, please.
Absolutely, Kevin. Well, accounts obviously are an indicator of what we're seeing as far as growth and demand in the online investing space. And what we've also included on the graph here or on the slide is a bit of a line graph with trading as well. And interestingly enough, what we've seen over the past number of years with trading and accounts is that obviously they've moved very closely together. And so zooming in here, I think the really interesting thing to highlight is the line graph and the trading. And as you can see, we go back to September 2017 here, and really, September 2018, 2019, relatively flat in terms of trade volumes. And then we hit, the new year in 2020, and that's about time when the pandemic hit. And as you can see, trading volumes just skyrocketed. Interestingly enough, the markets bottomed out in about March 2020, and they just flew up from there. The TSX composite, I think, rose about 85% from the March 2020 lows to early 2022. The S&P 500 over that same period did just over 100%. And as we can see, trading volumes skyrocketed. We saw 3x lift in trading volumes relative to pre-pandemic trading. We've come down off of that, and we're starting to see trading normalize a little bit. But what's great about what we're seeing is we're still seeing trading elevated at about 2x what we saw pre-pandemic in the industry. So the pandemic itself brought a lot of engagement for online investing. I know we have a few other slides coming where we're going to talk a bit more about that. And while we've seen trading and account growth normalize, we're still seeing elevated demand relative to what we saw pre-pandemic.
Oh, that's very interesting. So accounts have been steady, but what you're seeing is the trading volume had to hit a peak and start coming down a little bit, but still elevated. That's very interesting. Now, of course, we've certainly seen the pandemic's been a big part of some of the transition. Maybe talk to us a bit about what that's meant for you and the firm and from the industry itself, please.
Yeah, absolutely. I think the slide does a great job to kind of highlight, we saw the introduction of a new subset of investors. We've got some quants coming up on another slide as well, talking about new account growth. But a lot of the new accounts we have seen, Kevin, have been from what we would call next-gen investors. So those that are 35 and younger. And so when the pandemic did come, obviously what we did see is, things like sporting events, going out for dinner, concerts, vacations, all of those things were put on hold. Even going into the office, right, for a lot of folks was put on hold. And what that meant is a lot of individuals, a lot of investors, a lot of new investors had a lot more time on their hands, a little bit more money in their pockets at times, and we're looking for something to do. And so that combined with a lot of the social media trends, the Reddit, the stock tweets, things of that nature really drove a lot of engagement for existing investors, but a lot of new investors as well. Kevin, and that also is what spurred a lot of that new account growth and a lot of that trading activity.
Oh, I think you're absolutely right. I'd say probably not just younger people too, but a lot of people had time on their hands. I think people in retirement or getting towards retirement, of course, had a little more time to start taking control of their investing. And I think you're certainly seeing that in your account number growth, but also seeing in your trading aspects too.
Absolutely.
Now, talk to us a bit about the metrics you look at when it comes to online investing solutions, and it's the elevated across, and these are more specific metrics you kind of focus in on.
Yeah, we've included a few insights here on client growth trends, product trends, and some insights on demand for digital advice. As I mentioned earlier, Kevin, we're still seeing elevated demand in InvestorLine and in our category, online discount brokerage. I think the one area to zoom in on here that I think your audience would be kind of keen to hear a bit about is when we look at product trends. And so cash balances have decreased about 4% year over year. And in some ways that kind of makes sense because we've seen a really dramatic rate environment as far as interest rates really increasing. So there's been a lot more fixed income options out there for investors that weren't as appealing about a year ago. And when we look at net flows into some of the key asset classes, what's really interesting here is despite what we talked about earlier in terms of massive rally over the course of really that 2020 to 2022 timeframe, we're seeing some turnover, right, from an asset allocation standpoint. So equities, net flows at InvestorLine down about 40% year over year. ETFs, even ETFs, net flows down about 33%. Mutual funds also down. And then, of course, on the flip side, fixed income, tremendous demand, 145% year over year. Money market up more than 200%. And obviously, those two particular asset classes have a smaller relative base, and so the percentages get exaggerated a little bit, Kevin, but it really goes to show what we've been seeing as far as just the cyclical nature of the way money and investments move and some of the shifts that we've seen over the past year. We've got one little quant soundbite on the left-hand side around client growth, but again, speaks to next gen. They've been driving just like a significant amount of our new client, a new account and client growth coming in around 50%. I think the last thing to highlight here, Kevin, is digital advice. We're also seeing tremendous demand as well, and I think that what we've seen with the pandemic, we talked about some of the drivers for why people were looking to invest. Online investing really appealing because it's very easy, and you don't need to go into a branch, for example, to open up an account. You can do it really easily online, and that was a big part of the impetus. And so not only have we seen tremendous growth with self-directed InvestorLine, but a lot of growth with Advice Direct as well. And as you can see here, client growth, 67% lift year over year, our AUA well over $6 billion now. And so for those in your audience that aren't familiar with Advice Direct, it's very similar self-directed in that you take control of your investments, but you have a bit of a co-pilot with you, providing with digital advice. And so if you're the type of investor out there that likes the idea of having control, but wants the benefit of some advice as well, really encourage the audience to check out Advice Direct. It's a really unique offering. There really isn't an offering out there like it in the space today.
Oh, I agree. It's a unique piece because you're gonna kind of get that hybrid between the traditional advice model out there and the traditional direct model. So a bit of both, actually. So yeah, you're absolutely right. And very good tools. I think we've highlighted it before in this show. Let me keep going through here, because what I also want to talk about, you're talking a bit about the growth in the flows, or change direction of flows. Let's talk a little bit about the assets now, if we can, and dive into that and this is an industry perspective. We look at this.
Yeah, this is an industry perspective, and I think what we're seeing here is overall AUA and very similar themes to what I carved out before. Deposits, actually interesting enough, a little bit of a lift here, and that might be just some of that money coming out of the markets, out of equities, and not necessarily going elsewhere yet. But same story as far as fixed income up about 11%. And seeing ETFs down, long-term funds, interestingly enough, down here as well, Kevin. But I think the other thing to really highlight is when you look at the overall AUA, ETFs now over 90 billion, and long-term funds 30 billion, so about 3x what we're seeing in kind of mutual funds in the space. So ETFs, a great indication that there's a lot of momentum, a lot of growth that we're seeing with ETFs on the self-directed online discount brokerage space. That trend continues, and we expect to see that going forward as well.
Yeah, and from an ETF perspective, it's really interesting to see that transformation. But I also think it's enabled by the support that direct channels bringing to the industry to help them become better investors, get more insights around exchange-traded funds. Now, we'll come back to that a bit about some of the stuff you've been doing in this space around tools, but let's dive a little bit still deeper into what's going on in ETFs within the direct channel space. And what I want to highlight here the most is the asset mix on the side and the different types of things inside the asset mix. So when you look at the ETF industry, of course, there's not just one ETF out there. There's not just one type of ETF out there, but we're certainly seeing within the direct channel that, equity ETFs tends to be the dominant part of the portfolios for investors out there when they utilize ETFs within their asset mix. And then if we take another look beyond that, you're sort of seeing the asset allocation ETFs become a key part of the industry too. And then fixed income, and you're seeing a big notice in fixed income. Hopefully see that cascade into ETFs too, but ultimately you're seeing a slightly different mix, but that's basically how people build their portfolios. The other thing I want to highlight here too, again, industry perspective, taking a look at the other side of the bar charts, and I know they're busy, so bear with me. What we're really looking at here is across the industry, being full service discount, where the ETFs kind of sit. Now again, keeping that yellow kind of bar, a yellow aspect now in the bar, that's what I take your attention to. What you're seeing is that growing demand or growing utilization, or I guess share, let's put it that way, of ETFs being utilized inside the direct channel industry. So you're seeing that transformation, as you mentioned before, in the growth of ETFs, and you're certainly seeing it across the industry here coming in, and that's a metric of direct relative to full service.
And I'd love to comment a bit on that too, Kevin, because I think there's a couple of factors driving that in terms of seeing more and more of that growth and demand in the online discount brokerage space. Number one, tremendous product innovation, right? Like you talked about, multi-asset class, right? Like we've got covered call type ETF products all packaged up and done simple for you. ESG and there's tremendous innovation I think we've seen. That's a testament to you and the team. And of course, a lot of your peers in the industry as well, listening to what investors are seeking and producing some fantastic product. And at the same time, we talked earlier, Kevin, about newer investors coming into the space as well. And so as a new investor coming in, often you're coming in not necessarily with like a huge substantial amount to invest right off the bat. And so what ETFs can really enable is that easy way to get broad diversification with a single holding or handful of holdings. And so ETFs are a great vehicle that way as well. And so I think those factors combined have really been part of the story, frankly, for why we continue to see more and more engagement and growth with ETFs in the online discount brokerage space.
Yeah, Dave, really well said, because I really think that you look at ETFs now, today, and if you dial back to, back to 2009 when BMO ETFs entered the industry, can you build a better portfolio today than you could back then? Yeah, that's the innovation ETFs and different types of portfolios too, more income focused, maybe more low volatility focused. All those choices are now available in portfolio construction. So well said, you have better tools to build better portfolios.
Absolutely.
One of the key things, of course, I also think that's been driving the growth in this space is offers of yours, for example, where you have a free trading aspect. Talk to us about that too, please, Dave.
Yeah, so Kevin, it's been about, I'd say, a year and a half where we were actually listening a lot to our customers, our clients, in terms of what they were looking for. As I mentioned, we've been seeing a lot of the trends that we've been putting up on the slides here today in terms of demand for ETFs in the online discount brokerage space. And what we're hearing is our investors were looking for some smarter options from the standpoint of pricing, but also looking for more tools and capabilities. And I know we have another slide following that'll zoom in more on the tools and the capabilities. But from a pricing standpoint, we decided that there was an opportunity for us to build a suite of commission-free ETFs geared towards self-directed investors that really value the role that ETFs can play in their investment portfolio. And we wanted to create this list and options that were really applicable for any type of investor, whether you're new and novice, all the way through to sophisticated and more mature. So that was really important to us. And so when we took a step back, Kevin, what we also evaluated was, where are we seeing demand? Like, what types of ETFs are our clients buying today? Where's the demand? And we found it really concentrated across really the top 3 providers in space. So that being BMO, BlackRock, and Vanguard. And so we knew that it made sense to think about constructing a suite that really centered around those particular manufacturers and obviously their various offerings. And so what we did is we looked at each of those manufacturers, and we essentially wanted to create a broad range of asset classes and subclasses that would be consistent with standard portfolio construction. And so we have, equities, and within equities, Canadian, US, international, emerging markets, and fixed income. We also have, from a fixed income perspective, government, corporate, other mixes as far as fixed income mandates. We threw in multi-asset class. We talked a bit about that earlier, Kevin, but that was another area we were seeing demand. Thematic, another area, and ESG. And so all of those different classes combined really put together a list that we feel really appeals to just about any type of investor. What we're finding now, Kevin, so all of those ETFs are $0 commission, by the way, and you can go to our website at InvestorLine and you can check out what's in there. But what we're finding today is about 25% of all of our ETF trading is concentrated among that list, that suite of about 90 commission-free ETFs. So it really validates we did a good job to kind of zoom in on where there's demand. And we've been getting nothing but positive feedback from our clients about offering this suite. So we're really excited about it.
Well, hey, thanks for letting us participate too in that.
Absolutely, pleasure.
Actually, then if you think about it too, I mean, really what you've done by building a portfolio and made it easy access, you've taken down some of the barriers. And taking down the barriers, I think that allows people to take a look at exchange traded funds as that tool to build that portfolio. And again, I think you can build a better portfolio today than you could a number of years ago, and I think that's a good thing. And I think you're on that trend to keep doing that going forward. But what are some of those key things that ETFs have helped investors kind of overcome, as they came into the marketplace? And I think some of those key things or common mistakes out there is concentration. I mean, the diversification coming from exchange traded funds, always having that basket approach to investing, it's certainly been a key advantage for investors, because it's less about the certain company, but it's more about the sector or the industry, or even the market being Canada, US. You can focus on that. The other things too you can look at is, staying in, not staying invested. Ultimately it gives you a little more confidence. You have a basket approach. But also if you think about it, you mentioned asset allocation ETFs, and that's a key thing for people too, because you have that basket approach, not just one part of the marketplace, but a diversified basket. Hand in hand with that too, when you come with the exchange traded funds, is that constant function of rebalancing, right? So if you think like maybe a sector base where it's eco weight, rebalancing back to the eco weight, or maybe it's a strategy based ETF like a volatility and focusing back at that and rebalancing that. And of course, going back to those asset allocation ETFs, maybe it's rebalancing back to that asset mix. Each one of those is kind of a different way and an advantage how ETFs have brought to the marketplace and really brought, again, better portfolio construction for investors. And I also like to think it helps take some of the emotions out of investing. Let's keep going here for a second. Let's dive back into some of the tools that you've been offering in the marketplace to help those investors invest in ETFs.
Yeah, thanks, Kevin. As we mentioned earlier, when we thought about what else can we be doing to better empower our clients and investors to invest smarter as it relates to ETF investing, we knew that we could do something with pricing and that commission-free suite, as I mentioned. But we also built what we kind of call internally like our ETF hub. And it's a place where you can log in, jump, and you can see kind of at the top there. I know it's a bit small, and I apologize to the audience and the viewers, but you can see that ETFs tab there. So there's its own landing page, its own little hub. And within that, there's all kinds of great tools and features. If you want to learn about ETFs, we've got some fantastic videos, starter videos for you to kind of just watch and view at your convenience to learn about ETF basics and some of the more nuanced ETF products. We've got a phenomenal ETF screener, Kevin, where from a research standpoint, if there's specific criteria that's really important to you, maybe cost or MER is a big driver, or maybe volume and just liquidity is a big driver. You can filter according to a lot of that criteria across sectors, industries, etc., to really zoom in on researching ETFs that you might think would be a great fit for your portfolio. You can even compare, so you can choose 3 or 4 different ETFs that you think are getting close to what you might want, and you can really dive deep and zoom in to understand a lot of the different nuances to ultimately help you make the decision that's right for you. And that's the whole spirit of it, is we want to empower our clients to make smarter investment decisions, and these tools really do that. At the bottom there, you can also see that we've got different themes where with a click you can zoom in and check out things like Canadian large cap equity, enhanced income equities, Morningstar 5-star ETFs, right? So already pre-filtered screeners, if you will, to help you zoom in. And then lastly, obviously, our no commission fee ETF list as well. So all kinds of tools, features, and capabilities here, Kevin. And the idea is that we do, again, believe ETFs are becoming more and more of an important and prominent vehicle for self-directed investors in the way they think about building their portfolios. We wanted to empower our clients with tools, features, and capabilities to make it even easier, and then obviously complement that with a really smart suite of commission-free ETFs as well.
Oh, good to hear about having tools. There's been a lot of choices in ETFs and expanding number of choices in ETFs out there. So tools like yours certainly help people navigate the marketplace, and like a focus on education. Always like the focus on education. Talk to us about modern digital investing platforms. So tell me a bit more about your platform, if you can, please.
Yeah, absolutely, Kevin. And I think what we've been seeing too is with this wave of demand and a lot of this demand over the past couple of years being younger investors as well, expectations around digital experiences, online trading experiences, I think have significantly increased. And so we've made considerable investment to roll out what we're calling InvestorLine 2.0, which is a refreshed version of the digital online investing experience with InvestorLine. We're really thrilled about what we've been able to roll out here. This has been a multi-year journey, if you will, to make these enhancements and really transform the online trading experience. We've pulled feedback from clients. We've received all kinds of great suggestions on how we can enhance the offering and the experience. I've highlighted a few things on the slide here in terms of what our clients can expect with the new experience, a better way to manage portfolio holdings. This is it's one of those things where it sounds simple, but a single portfolio view where clients can see a complete view of all accounts and all of their holdings all in one spot. And so being able to, again, in the spirit of creating simple user experiences, these types of changes have really landed well. A simplified trading experience, one-click equity and options trading that shows position level detail, real-time quotes, and the trade ticket. And so again, making that experience that much more seamless, that much more engaging and simple. And then an enhanced research experience. We already zoomed in a little bit on the ETF research capabilities earlier, but we've got all kinds of additional research tools and capabilities, comprehensive list of ratings and upgrades, downgrades, corporate calendars, dividend calculator, dividend data, all kinds of incredible research to really simplify that research experience and trading experience with InvestorLine.
Yeah, there's a lot inside it now, absolutely. And it's good to see you continue to expand those tools as your investors demand that. Let's quickly give you a note on your active trader program too, please, or platform.
Yeah, look, to complement what we just saw that's more geared toward desktop, I'll also note, Kevin, that we've built that out for mobile as well. And so the mobile experience has been completely transformed. We're really proud of that. What we're also about to roll out in a matter of weeks is an upgraded active trader platform. We're really proud of this. One of the key features about this, Kevin, is that like our current active trader platform today is Java-based, meaning you have to be at a desktop where you click one of those icons to open up an application. And what's really wonderful about this new active trader platform that we're going to be releasing is that it's web-based. And so that means you can access it from just about any browser, anytime, anywhere on your laptop or desktop. So we're really thrilled about just the accessibility being a lot easier. All of the clients that qualify for our active trader platform are going to have full trading capabilities, which is also an upgrade from today, where we have different levels. So we're really proud of that feature. And of course, from just a UX standpoint, user experience, customizable workspaces, just overall a dramatic facelift and improvement from our older version. So we're really proud of this, and this is coming out in, like I said, a couple of weeks. So we're very excited about that.
Oh, I look forward to seeing that. And then integrated ESG. Now, one thing we brought to our website in regards to our ETFs is a lot of new ESG insight as we launch our new site. Talk to us about what you've been doing for your site in regards towards ESG too, please.
Yeah, absolutely, Kevin. So we've been hearing a lot more and more about investors and our clients wanting to have tools and features that better allow them to invest according to things they value. And so we're really excited to be introducing some integrated ESG insights and research into the online experience. That's being launched in a matter of days as well, so very exciting. But what this is going to allow for is the integrated research capabilities to view things like environmental, social, governance insights for equities and ETFs, Kevin. So not just equities, but also ETFs, which is really important to know. And so there's going to be a lot of different tools to really look at companies and ETFs with an entirely different lens, obviously tilted towards environmental, social, and governance. And the idea is that with these insights, we believe it's going to empower investors to be able to think about building more sustainable portfolios. And like I said earlier, invest a little bit more according to some of their really important values. So very excited to be rolling out this first MVP of what we're doing with ESG integration, and there will be more to come to build on this first iteration. So we look forward to gathering feedback and building on it from there.
I think this is the future, in that initially people look at fundamentals to invest, and then technicals became a key aspect that people look at too. And I think going forward, ESG, or to your point, environment, social, and governance, will be a net new overlay that people look to invest in. And it's good to see you bringing those tools to the market too.
Absolutely.
Now, we got a few more minutes here, Dave. Can I take your time and effort and go through some questions?
Absolutely.
And we got a few questions sent to us. Thank you for the audience to take the time and effort to send us some questions. Really appreciate it. And Dave, this is I think a quick, easy one for you. Does InvestorLine offer dividend reinvestment plans on ETFs?
Short answer, yes, Kevin, we do.
Actually, I think it's a great feature because you can actually turn it on the account level and have anything go in there, automatically have that drip feature turned on, and great thing for like registered plans.
Absolutely.
Another question I got for you. And this is interesting, and maybe it's to do with how the markets are these days, but thinking about using stop losses going forward, Dave, can you explain how those work, please?
Yeah, look, this is a great question. And, when it comes to trading and investing, right, we're not always, at our computer ready to pull the trigger one way or another. And so the beautiful thing about stop loss orders is it allows you to kind of, predetermine an area. So let's say a price level. Let's say you bought a stock, Kevin, at $50 and you want to limit your loss on that. You can predetermine a level, like let's say it's $45 perhaps, where if that particular security declines in price, you have a preset order, and there's different types of orders. It can be a limit order where if it hits, $44.99 and goes through that, there's a limit order to kind of sell at that price. Or you can do a market order where if it goes through that $44.99 price, it sells at wherever the market's at. But essentially, it gets you out of the market, out of that position, and in a controlled way where you predetermine what that is. And so you kind of have the opportunity to take emotion out of it because you've thought it through. And there are some nuances, though, and I think it's really important that investors are thinking about using stop orders to do a little bit of the research, because there's a difference between like a limit stop order and a market stop order, for example, and there's pros and cons to either. So I encourage you to do your research. But overall, it can be a great tool and feature, especially for traders or investors a little bit more active, but can't always be in front of their computer to pull the trigger.
I agree. And you know what? It's good to know those kind of tools exist, and the more advanced features of like stop loss limit orders too that you have. Yeah. Keep going here. One last question. Oh, I guess coming back to me. Confused. What's the difference between a management fee and an MER? That's certainly something you're seeing inside the exchange traded funds business. Management fee is what the respective ETF company charges for their services. And then there's the MER. To get to the MER, for the most part, traditional ETF providers, it's the management fee plus HST. In some other cases, you might have operational expenses too. But key for you to look at, not just the management fee, but take a look at the respective MERs out there too when you're doing an evaluation. And I suspect that Dave's tools plus tools out there in general would have that information in regards to MER. So take a look at that as one of your thought process when you're looking at investing. Now, Dave, I think that's all the time we have for today. Appreciate the questions coming in. Dave, I want to thank you for your insights. Look forward to having you back in the future and maybe share some further insights to what's going on the direct channel. For those who can join us next week, got a great topic for you. Talk about balancing income and growth, in this case with cover call ETFs. Until then, have yourself a good week ahead. Cheers.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.